Hi guys, this is CA Balakrishna from Lecturepedia.in. Now in this class, we will be revising SA 560 subsequent events, a very small standard and also a very easy standard. Now first of all, what is meant by subsequent events? All the events that occur after balance sheet date but before date of auditor's report, and facts that become known to the auditor after the date of auditor's report but before the approval of the financial statements by shareholders will be known as subsequent events. Okay, let us understand this with the help of a timeline. Say now, this is 31st March balance sheet date. Okay, and auditor gave his opinion on, let's say, 30th of June. Okay, audit report date. Audit report. Next. Now, on 15th July, let's say, the financial statements along with the audit report have been circulated. Okay, circulated to shareholders and general public. Okay, and on 31st July, okay, financial statements are approved by shareholders in AGM. Okay, approved in AGM. This is the timeline. Now, here, all the transactions that occur or all the events that occur after balance sheet date and before date of auditor's report, okay, we'll be calling them as subsequent events 1. Okay, next, events after audit report but before the audit report and financial statements are circulated to the public, will be calling them as subsequent events 2. Next, after they are circulated but before approved by shareholders, these are subsequent events 3. Okay, now in this standard we will be discussing what will be the audit procedures that the auditor will perform in order to identify subsequent events 1, subsequent events 2, subsequent events 3. Okay, there will be different audit procedures for each of these 3. Okay, once we complete this, our standard gets completed. Okay, this is what we will be discussing in this standard. Now, these subsequent events can be bifurcated into 2 types. One is adjusting events. Another one is non-adjusting events. Now, these adjusting events provide evidence of conditions existing as on balance sheet date. Okay, those subsequent events which provide evidence of conditions that are existing as on the balance sheet date will be known as adjusting events. Example, let's say as on balance sheet date, entity is having a debtor of A Limited for amount 2 lakhs. Okay, 2 lakhs as on balance sheet date. Now, it is known to the entity that this A Limited will become bad debt, bad debt. Okay, thereby they want to provide provision as on balance sheet date. Okay, now after 31st March, okay, let's say after in, let's say on 15th May, okay, on 15th May, A Limited has filed for insolvency petition. Okay, now this filing of insolvency petition by A Limited is a subsequent event which provide evidence of conditions that are existing as on the balance sheet date. Okay, now this event will be known as subsequent adjusting event. Hope this is clear. Non-adjusting events. These non-adjusting events do not provide any evidence of conditions existing as on balance sheet date. Okay, regarding these non-adjusting events, no conditions will be existent as on the date of balance sheet date. So this is clear. Let's say, for example, on balance sheet date, entity is having some inventory of around 5 lakh. Okay, as on 31st March, it is having inventory of 5 lakh. Now, let's say in after balance sheet date, okay, let's say in April or May month, a cyclone has come. Okay, in that cyclone, all this inventory is damaged. Okay, now this cyclone will be non-adjusting event. Okay, it will not affect the conditions that are existing as on the balance sheet date. Okay, as on the balance sheet date, inventory is actually present. Okay, thereby the cyclone that has occurred after balance sheet date is not a adjusting event. Okay, it is a non-adjusting event. So this is clear. This is a small bifurcation regarding subsequent events. Now we'll enter into this standard. First of all, what are subsequent events? Subsequent events are events occurring between date of financial statements and date of auditor's report, and facts that become known to the auditor after the date of auditor's report. Okay, here is a timeline which I have already discussed with you. Okay, subsequent event 1, subsequent event 2, subsequent event 3. Okay, now we will discuss the audit procedures regarding these 3 events. Firstly, audit procedures regarding the subsequent event 1. Okay, that means events that are occurring after the date of balance sheet date but before the date of auditor's report. Regarding this, what are the audit procedures that the auditor will perform? Okay, to identify these events, what are the audit procedures that the auditor will perform? Obtain sufficient appropriate audit evidence for the events that require adjustment. How? Understand the procedure established by the management. See, now to prepare financial statements, it is a responsibility of the management. Okay, preparation of financial statements is responsibility of the management. Thereby, responsibility to identify subsequent events is also of management only. Okay, now what is the procedure that the management is following in order to identify subsequent events? Auditor will obtain understanding of this procedure that has been followed by the management. Oh, this is clear. Okay, understand procedure established by the management. Next, he will inquire management and those charged with governance whether any additional subsequent events are there. Okay, he will inquire with the management and those charged with governance. After that, he will read minutes of meeting held after the date of balance sheet date. Okay, after the date of financial statements. Okay, now in the subsequent meeting that is held immediately after the date of financial statements, there might be some discussions that have been made by the management. Okay, by reading minutes of that meeting, auditor can identify any subsequent events that have arose after balance sheet date. Hope this is clear. Next, he will also read entity's latest subsequent interim financial statements. Okay, if the entity is a listed entity, okay, it will prepare quarterly financial statements. Okay, by reading those subsequent quarter financial statements, auditor can come across any subsequent events that have arisen. Next, inquire entity's legal counsel. Okay, these are the procedures through which auditor will identify subsequent events. Hope this is clear. Next, audit procedures regarding subsequent events. See, I want to give you a small clarification regarding this subsequent event too. Now, So here we have discussed that subsequent event 1, subsequent event 2, subsequent event 3. First of all, you make it clear that subsequent events are those events that occur after balance sheet date, okay, but before date of auditor's report. Only these events will be known as subsequent events. Okay, that means only these events will be known as subsequent events. Then what about these two? The fact that subsequent event has occurred in this period is known to the auditor in this period. In that case, what will be the audit procedure that the auditor has to perform? Okay, the fact that the subsequent event has occurred in this period is known to the auditor in this period. In that case, what will be the audit procedure that the auditor has to perform? Hope you are able to understand this. Okay, that we have termed it as SC2, subsequent event 2 and subsequent event 3. Okay, that doesn't mean that this event has occurred in this period. Okay, this event has occurred in this period only, but the fact has been known to the auditor in this period. Okay, the fact has been known to the auditor in this period. Then how the auditor will react? What are the audit procedures that the auditor will perform? Okay, now we'll see audit procedures regarding subsequent event 2. Okay, that is subsequent events. The fact that subsequent events have occurred will be known to the auditor after the date of audit report, but before circulation of financial statements by management. Okay, auditor has signed the audit report. Okay, he has dated the audit report, and he might have either issued it or not issued to the management, but the sign has been completed. Okay, and before management has circulated financial statements to the public. Okay, in this period, auditor, auditor has known the fact that subsequent event has occurred in this period. Okay, now what the auditor will do? Let us. First of all, auditor will discuss with management and determine need to amend the financial statements. See, okay, auditor will first of all will discuss with the management. Management, I have found this subsequent event. Okay, and this subsequent event is an adjusting event. Okay, now how shall we deal with this? Whether you are ready to amend the financial statements? Okay, like this, auditor will discuss with the management. If management agrees to amend the financial statements, then how the auditor will react? If management refuses to amend the financial statements, then how the auditor will react? Let us see. Management agrees to amend the financial statements, then the job of the auditor becomes easy. What he will do? He will just to perform his audit procedures on the amended financial statements, and he will give new audit report, or he will amend the existing audit report. Give new report, amend existing report, or amend existing report, and extend audit procedures to the date of new report. Okay. If management refuses to amend the financial statements, in this case, two situations arise. Firstly, management is refusing to amend the financial statements, and if auditor he signed the audit report, he's dated the audit report, but he has not yet issued the audit report to the management. In that case, how the auditor will react? Second case, auditor has signed the report, dated the report, and issued to the management. Okay, he has issued the report to the management. In this situation, how he will react? Okay, what are the audit procedures that he will perform? Let us see. First case, report not yet issued to the management. In that case, simply auditor will modify his opinion. Why he will modify his opinion? Because management is refusing to amend the financial statements. Okay, thereby he will modify the opinion. Okay. If report is issued to the management, okay, auditor signed the report, dated the report, issued the report to the management. In that case, auditor will insist the management not to circulate this audit report to the public. Okay, notify not to issue to third party. If management refuses to follow the direction given by the auditor, okay, by refusing the auditor's direction, management circulates the audit report to the public. In that case, what the auditor will do? Auditor will take necessary steps to prevent reliance on his report. Okay, He can give advertisement in the newspaper asking general public and the shareholders not to rely on the audit report that has been circulated by the management. If management refuses, take action to prevent reliance on the audit report. Hope this is clear. These are the audit procedures regarding the subsequent event 2. Next, audit procedures regarding the subsequent event 3. That is the fact that subsequent events have occurred is known to the auditor after financial statements are issued to the public and shareholders, but before financial statements are approved by the shareholders in the general meeting. Okay. Now what are the audit procedures that the auditor will perform? First of all, auditor will discuss the matter. Okay, will discuss the issue with management. Okay, I have found this subsequent event. It is impacting the financial statements. It is a adjusting event. Are you ready to amend the financial statements? You will ask the management. If the management is ready to amend the financial statements, then what are the audit procedures that the auditor will perform? If the management is not ready to amend the financial statements, then how the auditor will deal with it? If management is ready to amend the financial statements, then auditor will simply perform audit procedures on the amended financial statements, and he will give new audit report or he will amend the existing audit report. Okay, that is a simple thing that the auditor will do if management has approved, agreed to amend the financial statements. See, first of all, he will discuss with management and determine the need to amend the financial statements. If management amends the financial statements, auditor shall carry out procedures on amended financial statements, review steps taken by management to ensure that the recipient of financial statements is informed of the situation. See, here, the issue is that management has already circulated the financial statements and the old report that is given by the auditor to the general public and the shareholders. Okay, now the management is amending the financial statements. In this case, management has to give sufficient information to all the shareholders and the public, stating not to rely on the earlier financial statements that were sent to them. Okay, auditor will see whether certain whether such a type of information has been provided by the management to general public. Okay, what is the procedure or what are the precautions that have been taken by the management in order to prevent reliance of general public and shareholders on the earlier audit report that has been issued. Hope this is clear. Next, provide new audit report or amend the audit report and include emphasis of matter or other matter paragraphs. Okay. In case if management refuses to amend the financial statements, in that case, auditor will notify the management or those charged with governance that auditor seeks to prevent further reliance on the auditor's report. Okay, auditor has given the audit report. It has been circulated to the public also. Now auditor finds certain subsequent events. Okay, and he wants the financial statements to be amended, but the management is refusing to amend the financial statements. Now auditor will ask the management not to rely on the audit report that I have issued to you. Okay, and also pass this information to all the shareholders. In case management refuses to pass this information, then what the auditor will do is, if management does not take necessary steps, then auditor himself will take necessary steps to prevent reliance on his report. Okay, take appropriate action to prevent reliance on auditor's report. Hope this is clear. By this, revision of SF 560 subsequent events has been completed. Okay, you can find this notes in our Telegram channel. Link for the Telegram channel will be given in the description. And in case you wanted to purchase classes, you can visit our website lecturepedia.in. Okay, bye bye. Take care.